this will be the only smart money concepts video you will ever need, hands down. So guys, before we can get started, you need to know some basic terminology. And even if you know these terms already, I would recommend you to stick watching because maybe you didn't know you were doing it wrong before. So first of all guys, we have market structure, and I've been hammering on this tons and tons of times over and over again. Market structure is king, and this will always be the first thing to look for. But what do I mean with market structure? So basically, market structure is whenever you have your chart and it goes up like this. Market structure is what we call the highs, the lows, and basically the structure market is forming, right? So in this case, we can see we're going up, we're going on an uptrend, bullish, and we can clearly see that because we can draw this trend line on, we're going up smooth and steady, right? But what if it is going like this? Okay, we can still see that we are on a trend because that's a logical thing to see right here. But what happens right here? How do you trade this zone? Before we come to that, first of all, let's give these places some names. I want to quickly interrupt this video to let you know I have a giveaway going on my Discord. I've partnered up with FundedNext to give you guys 3 2-step 25k stellar account challenges. So if you want to know how to participate, check out the Discord quickly because I will be announcing the 3 winners of the 25k challenge on the 1st of July. So this is your high, this is your low. Then right here we form a higher high since this one is higher than the previous one. And right here we form a higher low since this one is higher than the previous low. And whenever you have higher highs and higher lows, this indicates to us that we are on an uptrend. And that is not solely based on the trend line that we can draw on, but it is solely based on the market structure that we can identify. In this case right here, as you can see, we have higher highs, higher lows all of the time. But right here, what happens right here? We have our high, we have our low, we have our higher low right here, very, very slightly, but it's still a higher low. But then what happens right here is we create a lower high. And then what forms is also a lower low. Whenever this happens, guys, we are coming to the next thing in our terminology, and then you have a change of character. It is also called a CHOCH, a C-H-O-C-H, but I shorten it CH right here. Why is this happening right here instead of some people are saying that it is happening right here? Let's say it is happening right here, right? How do you know this is a lower high before it broke the previous low? You can't identify that this is a lower high before it broke the previous low because in order for it to be a lower high, it needs to break that previous low. So that's why it's only happening right here, or change of character. And what is a change of character? So a change of character, basically the name itself says it already, the character changes. So the character of the trend changes. So we go from higher highs and higher lows to suddenly to lower highs and lower lows. And then to the next thing right here, as you can see, we have again a higher high right here and also a higher low right here. So what does happen again? Again, we have a change of character. And now it does happen right here, because now we can identify this is a higher low, this was a higher high, because this low breaks the previous high by creating a new higher high right here. Then we come to the next thing, a break of structure. A break of structure is simply when the current structure gets broken. So our previous swing high right here gets broken, this is a break of structure. Goes to the upside, comes to the downside, previous high gets broken again, bam, break of structure. As simple as that. So this is a break of structure whenever the previous high in an uptrend gets broken, and a downtrend whenever the previous low gets broken. Whenever you have a switch of character, you have your change of character right here. This only comes whenever you have and a lower high and a lower low after a higher high and a higher low, or a higher high and a higher low after lower highs and lower lows. Then the next thing is equilibrium. So equilibrium is basically the point right in the middle from A to B. So for example, I'm going to use my fib tool for this. Right here, as you can see, this is my equilibrium. This is 0.5. This is equilibrium. And why do we use this? We use this for premium and discount. We have this belief that smart money never buys in premium area. And basically everything above the 0.5 area, like this, is premium area. And everything underneath the premium area is discounted area. So automatically we are only going to look for buys in this example when we are in this discounted area. Then we have all the blocks and fair value gaps. I will explain those when we are going to the live charts in a minute, because it is quite difficult to explain this on drawn out charts like this. But basically an order block is a place in the market where we believe that smart money tends to lay their orders, then a huge liquidity comes into the market and the market reacts drastically to that point in the market. A fair value gap is basically a large imbalance zone in the market. And I'm going to tell you how to identify that real quick. Then last but not least is liquidity. So we tend to believe that we have buy side liquidity and sell side liquidity, and basically that above previous highs, like in this example right here, will be liquidity. Because people tend to go short from this high. As you know, we are not all on the same side. Some people, they short this, some people, they buy this. Whenever you're shorting this, your stops will be above here most likely. That's what all been taught. All of the books tell you to do that. So everyone is doing that and is putting their stops above these highs. How can we use this to our advantage? As you can see right here, buy side liquidity gets taken out by this high. And we can see a massive reaction on here. I know I draw this on myself, but we are going to the charts in a minute and you will see this happening over and over again. You can see a massive drop to the downside. This is whenever buy side liquidity has been taken and we can use this to our advantage. The same goes for sell side liquidity. Right here, when we have this change of character, also sell side liquidity was taken. So even though it was a change of character, it was still a change of character, right? It was also sell side liquidity being taken. And whenever that happened, it is important to zoom out to the bigger picture. And for example, if this is the 15 minutes and this was all happening right here, but the 1 hour was bullish, the 4 hour was bullish, we know this change of character doesn't mean much and we can prepare ourselves to take long positions after the sell side liquidity was being taken out. So basically it's a false breakout to trap traders into the trade that they think it goes short from here, while in reality we're just taking out stops and continuing the trend higher from there. So I hope this is a bit clear. Now let's go into the charts. I'm just on EURUSD. This is from last week or from last month, better said. And let's just see how we can implement all of the things that we just learned into this chart right here. And for everyone that is already going to say it's cherry picked, I'm just going to the left and we can go more to the left or to the right. It doesn't even matter because you can do it yourself and you can see how this works perfectly. Right here, we were in a downtrend. Basically, whatever we are doing first is we are creating and marking out our highs and lows. So let's just start from the left. We have our high, low, lower high, lower 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 low, higher high. As you can see, but remember, it doesn't mean anything as long as there is not created a higher low. Lower low right here, but then something happens right here. We have created a new higher high, just the same as here, but also created a new higher low right here. But remember, the best thing that we could possibly do is wait for a change of character happening right here. And I'm now doing this on the 1 hour, guys, but you can do this literally in every time frame. So change of character right here. From now on, we're only looking for bullish trades, right? So we came out of this bearish trend and I will show you in a minute how you can trade that when you're just following the trend. But now we are catching that reversal because this is what the most people struggle with. They see this happening and then they don't wait for this high also to be broken, for that you have that confirmed market structure shift, that confirmed change of character. So then we are taking our fib from the low to the high. We're only taking trades underneath equilibrium. As you can see, we never came back. So then this previous high gets broken. We are going to look for the low that caused that previous high to get broken. It was this low right here. We take it up to the high that broke the previous high. We're only taking trades underneath equilibrium. Basically what I like to do as an extra confluence is I only like to take trades that is around the 61.8, but that is just your personal preference. And now we are coming to the fair value gaps and the order blocks. So how can you identify an order block? It's basically a candle in the opposite color that caused a big move to happen when it reversed from there. So in this case right here, 2 candles that created the move up like this. This big candle caused the move like this. This big candle caused the move like this. As you can see, a very, very nice zone. And as you can see, it can be a very effective tool to use in order to identify trades. Then a fair value gap is, like I said, an imbalance zone in the market. So as you can see right here, this candle right here is no wicks to the left, no wicks to the right. It is an imbalance zone, as we call it. So if this fair value gap right here. So what can you do? You can take the trade off the fair value gap as long as it is underneath equilibrium. So you could take it right here. But if you do that, in this scenario, your stop loss would be quite large, right? Because you need to place your stop loss underneath the previous low, as if it would violate this low, your structure will be violated, and you have the most chance to win the trade if you're following the trend. And again, if this low gets broken, the trend would change and that is less likely to happen. How can we improve this trade? If we enter right on the order block right here. Stops still underneath the low, and again, this is quite some pips, but remember we are entering on the 1 hour, guys. Then I would recommend you to take your targets at the previous high right here, as this will be the closest buy side liquidity that you can take out. And remember, we are trading with the trend, so the most likely scenario to be happening is that this high gets taken out right here, bam. So then we get a break of structure. Remember, if we are in an uptrend, every high that gets broken will be a break of structure like this. We will look for the low that caused that high to be broken. The lowest point was right here. Highest point right here. Then we can take every trade underneath equilibrium, but we want to combine it with a fair value gap that is right here, or an order block. And as you can see, it was stepped very, very slightly, if I'm doing this correctly. Yeah, it was stepped very, very slightly. So this could have been your trade. And this is also, as you can see, very nicely inside of the 61.8 area. Like we said, stops underneath the previous low. And I know this is a large place, guys, to do this from, but it will be the most effective. Target the previous highs and bam, there you go. And how you can even improve these entries and up your risk to reward, I have made videos about it. Check out the info card linked up there. And this way you will be able to move your stop loss even higher and create yourself a very nice risk to reward. But remember, it is better to take a larger stop loss and take smaller winnings than get stopped out if your stop loss is too small in this case. Let's go further. The low that broke the previous high was this. This is your new high. And by the way, guys, when price is moving up, this will be your high, this will be your high. Keep moving it up until price comes underneath your equilibrium, okay? This is when we can call it a pullback, and only this is when we are entering. Right here, we have an order block inside of our 61.8 area. And guys, this is why I use the 61.8 area. It just aligns so beautifully most of the time with your entry signals. And this is a nice fair value gap that we have right here. So again, I will choose the better choice. And this case, entry right here, stops underneath the low, targets up here. Again, we can better this if we zoom in on a lower time frame and if we use some sniper entry techniques. Then I most probably would put the stop loss underneath here. But the purpose of this video is to make it as simple as possible that you can make money with this. And if you're only taking 1 over 1.6 but you're winning 90% of them, I would rather have you do that than take 1 over 7s like this, only win 10% of them and have your psychology all messed up. So that is why I'm demonstrating it like this. Stops underneath the swing low, targets on the previous high, and just taking it like this. So guys, in this case, this is our current price. What can we expect, or what do I expect from this price right now? As you can see right here, we had a break of structure to the downside as our previous swing low had been violated. We also created a lower high right here, but we can't say it is a confirmed lower high yet because this previous swing low hasn't been broken, right? So as soon as this previous swing low gets broken right here, we can speak of a confirmed market structure shift on the 1 hour, and we can short the hell out of EU. So guys, I want you to give this a try and do it exactly like I laid out in this video. And you only need to win 1 out of the 2 trades in order to be profitable with this. And like you can see, you will definitely win more. And I said this works on every time frame, but why don't you do it on the 1 hour? I know everyone is telling you to do this on the 1 minute or on the 5 minute or on the 10 minutes, but don't let the internet mess with your head. If you can be profitable on the 1 hour, why would you even go lower than that? As you know, the higher the time frame, the higher the probability will be that you will win your trade, as the confluences will be much, much stronger. So this is some food for thought, guys. If you win 4 out of the 5 trades, let's say if you're trading the 1 hour, you win 4 out of the 5 trades a month, right? You're only taking 1 trade a week, and you can definitely find more trades than that with this. But let's say you're only trading 1 trade a week, and then 1 week too, as you have 5 trades, and you're just risking 1% on all of them. And let's say your risk to reward is 1 over 2. As you can see, it was sometimes 1 over 1.6, 1.7, sometimes 1 over 2. Sometimes you will have 1 over 3s, 1 over 4s with this. You will have an 8% gain by the end of the month. You lost 1 trade, you won 4 out of 5, so you will leave with a 7% gain at the end of the month. Guys, on a 100k challenge account, this will be $7,000, right? For example, Funded Next gave a 90% profit split. So you will leave the month with 6.3k. And this is insane, guys. Wouldn't this change your life drastically if you would just do this? Just follow what I've been teaching in this video and just simply do this. You don't have to overcomplicate things so much. And you can if you like to do that and if you like to improve on some things, but fundamentally, just do this. You don't need to trade on the 1 minute every single day. You don't need the 1/7 every single trade. You just need to do simple things and you will get great outcomes. Guys, if you enjoyed this video, don't forget to leave a like down below. Don't forget to subscribe to the channel if you're new, and I will see you in the next one. Bye bye, guys.